Barloworld is warning that geopolitical risks are fast overtaking inflation as a primary risk factor. It comes as the diversified industrial group reported lower annual earnings in what it describes as a challenging trading environment. Revenue for the 12 months ending in September dropped 6.9% due to subdued trading results from equipment Southern Africa. Low activity from the Vostochnaya Technica has also been cited as a contributing factor. Eurasia's performance, on the other hand, led to what's been described as exceptional growth for Barloworld Mongolia. Barloworld CEO Dominic Sewela speaks to us now. Thank you so much for your time, Dominic. A mixed picture here, but first, do give us those details around the impact of geopolitical matters on the business. As diversified as you are, this you could not run away from.
Certainly, Chimita. Thanks, for the invite. I think when you look at Ukraine-Russia situation, obviously that is gotten worse. When the war started, we thought the war would be over in a short space of time. It has continued, and I guess what comes with that is also the sanctions that are imposed on Russia, and therefore that creates a problem and a challenge in our Russian business. If you look at Mozambique, closer to home, following the elections, the riots in that particular part of the world has made it very difficult for both our staff and our customers to be able to do business in that environment. But having said so, you just highlighted Mongolia. Mongolia has basically shot the lights out at 66% revenue growth. The bulk of that driven by machine sales at about 143% high compared to last year. I guess in Southern Africa, the challenge has been basically the cyclicality. When you think about where commodity prices are, where mining customers, that we provide this equipment and services to have also taken a pain, largely due to low demand in commodities. And that's basically, it's the challenge we're facing in our environment. But, it's not unexpected, when you operate like in emerging markets. So we try not to focus too much on those things that we can't control. Say, what are the levers that we can pull? One of those is making sure that, cost containment is well maintained. Cash flow is something that we manage very tightly, and our working capital. Because, then lastly, it helps you with a strong balance sheet. Because if you have those ingredients, you are able to withstand many storms for many years.
At this point, would you say some of these storms, having indicated the levers that you have in place, Barloworld has managed to stay more than afloat, especially as we go into a new year, being 2025?
Certainly, I think the prospects are looking, good. If you look at, just in South Africa, at the time we released our interim results, we were going into elections. Subsequently, we've had elections, and that led to a GNU. And the prospects look better on that front because whatever cost containment that we sort of rolled out are paying dividends. Similarly, in our ingrain business, we also had challenges, with plant, availability and efficiency, and we put some capital aside to that, and that has yielded good results. So similarly, in terms of inflation, we're seeing the interest rates dropping. We've also reduced our debt, our gross debt rather, by 29%. And that augurs well for any upturn in terms of demand for equipment, in terms of growth prospects. So we'll be well placed, and there's also Trump 2.0. I mean, that's going to be very interesting once Donald Trump, who's the current president-elect of the United States, is he going to go through, with his promise that he will stop the war between Russia and Ukraine. And if that happens, obviously you're going to see, better prospects for our Russian operation.
And given all those interesting developments on the political side of things and the subsequent effect on business globally, the near-term outlook for Barloworld, where does it stand?
I think near-term, it's pretty good, because if you look at the fact that the board has taken a decision to also declare a dividend, so we've increased our final dividend to 520 compared to 5 rand, last year. It's about 4% increase, just short of shy of inflation, so that's a good indication. And as I've already spoken about, the balance sheet. Therefore, if you look at all those, ingredients, we're well placed, to face any opportunity that can come our way.
Lastly, if I may add this question in, Dominic, do talk us through the progress, if you are able to, in the negotiations over plans by a consortium that you are closely linked to regarding a takeover offer.
I guess at the moment, I can't say more than what the cautionary says. To an extent that there would be progress on those discussions, yes, we'll be able to, the company will be able to via sense, give an update as to what those are. But unfortunately, at the moment, I can only limit myself to the comments that I made on Sense.
Only fair. We look forward to further developments. Thank you so much for your time and contribution. Dominic Sewela is the CEO at Barloworld, talking us through the latest interim financial results.